Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. First off, want to thank all of you guys that stopped by the options session last night. Um, as usual, just great collaborative environment. Just talking about overall state of the market, uh, talking about trading the open, talking about trades. Just really like it's like a great opportunity every couple weeks to just spend some time, like just really like diving into options trading and the mentality and just kind of get us all on the same page. So thanks for you guys that stopped by for that. If you weren't able to make it, the recording is up on the website, so definitely check that out. Uh, I didn't go over Walgreens in the session last night, but this was obviously a trade idea coming into the week. Okay, and this was a throwback to what we saw a lot of actually in January and February, right? And this is was a little bit more unusual in the sense that obviously this thing had gotten hit really hard in March, right? So the reason why you haven't seen too many of these recently is because we've basically gone up almost nonstop, right, since the beginning of January. So like stocks that have gotten crushed recently ahead of earnings or some sort of catalyst have been fewer and farther between after the last 3 months. So we saw this more in January after December's like huge flush, right? Um, and it's just one of these interesting setups that it takes a few things to happen before to kind of really get the ball rolling here. But then once you get these setups, there's been some really fantastic potential with these. And what was important to look at when it came to Walgreens and what those setups were like in January and February was what was priced in and what were the major recent developments, right? And a lot of times, what I saw in January and what I saw in Walgreens this week, coming into this week, is that the options were priced um, basically in line with like the historical moves with what this had done in over the last year, right? Historically, right? Like moving earnings. So like here, this was earnings, and then go back a little bit further, and this was earnings. So this was also coincided with an Amazon competitor announcement. But basically, coming into the week, the Walgreens options were pricing in around $3, which roughly speaking, was actually on the lighter side compared to what it had averaged. It was averaging closer to like a 375 point move or in that range. I mean, it's a little bit tougher because this big drop in last June kind of skewed the average move there. But generally speaking, it was priced in 3 points, which was even a little bit under what it had moved, which was closer to like 375 or so. Um, but they weren't pricing in like recent developments, right? So they were priced like what it done in the past, but it wasn't pricing in what like the new future or like the new recent developments. Okay, and what I mean by that is this. So the stock got absolutely crushed in March. There was some pushback around selling cigarettes, and then there was also a lot of weak commentary about pricing. So like drug pricing, uh, uh, basically like the company deals with like prescriptions and getting reimbursements, and there was weak environment on that front. And I mean, it wasn't just Walgreens; there was CVS too, right? So this thing got absolutely crushed during the same period. So it wasn't just Walgreens; it was also CVS. And what that did was it really expanded the near-term volatility, right? The near-term trading ranges really opened up. So it's something that had been a little bit quieter. I mean, December was kind of crazy, just like everything else in the market. But then January and February was a little bit more, back to like sideways, and then you had like this really sharp drop. The ranges expanded, the average trading ranges, the volume expanded, the volatility expanded, and what it did was it put Walgreens right at this really super critical long-term level. So let me right? So put it right at the 60 level again, right? And going into earnings, it was priced in 3 points, right? So let's go back. So it was priced in 3 points. Um, and what you could say is that there was, 3 points would basically put it either under support, right? So they would set up a potential multi-year, multi-period breakdown, right? But if it broke below 60 with volume, or on the upside, I mean, there was like this really wide air pocket up into like the 68 range, right? Because it had gotten hit so hard, and there was plenty of room higher, and like the next key area of reference wasn't up until like the 50-day, which was about 5-ish points higher. So, um, there was visibility for a move greater than 3 points just on the chart, expanding near-term volatility, larger trading ranges over like the last month, and options that didn't really seem to be accounting for that, right? So that's why I thought volatility strategy, so strangle in this case, was interesting, is because it was something like we saw in January, where the options didn't appear to be reflecting recent fundamental developments in this case and technical developments, right? So obviously, what happened was they missed across the board, cut guidance, pretty ugly morning, and the stock gapped down to like the 55, 50 area. Okay, so it was priced in 3, and it ended up moving like 8. And what that basically what triggered was, right, when it broke below 60. So going back, right, so when it broke below 60 with volume, that basically set up like a multi-year measured move 10% breakdown, right, which played out real fast. So like breaking below 60, you're looking for about 10%. That put it in like the mid 50s, right? So in this case, it got down to 55. So it was that combination, 2-for-1 trade that I'm always looking for, right? You get like the measure move plus like the combination technical move on top of that. In this case, you get the 10% breakdown through 60, pricing in 3, ends up moving 8, and those are really like the setups that I'm always on the hunt for. Okay, obviously, like I said, you haven't seen like this particular setup in a couple months because we've had such a huge run in the market, but this is why I love like two-way trading, because if we do end up getting a pullback in the overall market, we could end up seeing some more patterns like this, which are great when it comes to these catalyst trades. All right. So it wasn't a busy week in terms of schedule news. Next week is not a busy week in terms of schedule news, although earnings season will kick off with the banks on Friday. Okay, so you have J.P. Morgan and Wells Fargo next Friday. So earnings season will get going, but it won't really pick up in earnest until like the following week. So it'll be a little bit slower, but it doesn't mean that there's not stuff to do, right? So even though there aren't as many names scheduled, a bunch of the names that are scheduled are actually pretty interesting, like Walgreens, for instance. All right, guys. So let me know what you think. All right, let me know what you think about Walgreens, about this trade. Let me know what you think about anything we may have talked about in last night's lesson, or just any of the names I may have covered in the earnings on the radar video for this week. If you guys want my opinion, or you want to bounce an idea off me, I'm happy to help when I can. All right. So I hope you guys have an awesome night, and I'll talk to you all tomorrow.